Hello, welcome to McBoss Capital channel. My name is Michael Chu. This is a recap video for the week ending July 31st, 2026. In this video, we'll cover the major indexes and some of the macro stuff, and then we'll drill down to the mega cap tech stocks and related stocks. So we'll start with the Nasdaq composite chart here on the weekly. This week we able to come from the lows and bounce back up. So we started the week kind of weak, but then we're able to close up at the top of the range. So that is a good sign. Because the last 2 weeks you see we were down, coming down below the red line, which is the 10-week moving average. So as we got closer to the black line, which is the 40-week moving average, we are able to bounce. So at least we closed the week strong. And up 1.59%. On the daily chart, we can see Monday, Tuesday, Wednesday being the Fed announcement day where there is no interest rate hike at this on Wednesday, so no interest rate hike. And then after that, we were able to bounce back from Thursday and Friday as well. First we came to the 10-day green line, then we went to the 21-day moving average, right? So both days are good, but we're still in a downtrend. We're still below the 20, like the 21 day right now, even though we're close to it. And then we have the 50-day, the red line, which is starting to curve. And generally, when it starts to curve down, you can see from here, the previous correction here was February to April, and when you see the red line curve, it doesn't look that good for the index, right? Especially when we're still down here, we're not even close to it. So as that comes down, we could see more momentum going back down. Again, it's hard to say what will happen. Obviously, we still have tons of earnings coming out. This week being one of the major weeks so far, we have at least 2 more weeks of intense earnings being released, and that could, including obviously the guidance, and that will, kind of dictate where the market will go and where stocks will go, especially for growth stocks. And there's lots of stocks that have already reported. We'll cover in a part 2 video where we specifically talk about more growth stocks there. So please make sure to follow. On the monthly chart, we are down for the second month in a row. So that is also not a good sign because, generally having 2 months in a row is not a good sign. Like if you see the 2022, even though those swings are much bigger, but still, like that was the, one time there. We did recover here in 2023 from 3 months down, but and then we did recover 2025 here, but that was a very big 3 months correction there as well. And then recently, right, we have early February to March. You see those 2 months there also coming down. So nothing severe in terms of pulling back or correcting. Like it doesn't look like a very big dent on the chart at all. It still look like it's in the uptrend at this moment. At least on the monthly chart. Let's look at S&P 500 on the weekly chart here. We are, been holding this red line here. Last week we broke it. We closed below it for the first time. And then this week we able to bounce back and just close slightly above it. So that's after, hitting a lower low than last week. So that's not a bad thing because we're able to come back and we test the low as well. So that's a good sign. Going to the daily chart, we can see we have been, having a rally since April, early April, very strong rally, and then we kind of just range bound, right? And even the recent pullback here, we didn't make a newer low compared to these 2 points here. So that's a good sign. Nasdaq did make a lower low, but S&P didn't. So that is still a good sign. And then on Friday, you can see we clearly come back above 1021 and 50-day as they converge around the same area. So obviously one day is not enough. But if we see a fall through on Monday and we continue to climb higher, that'll be a really good sign, right? Obviously we still have this. If you draw an upper channel line here, we have this sloping down gently. That will be a trigger breakout if we break above that trigger line, that trend line there. So but that is very near the previous two highs, right? So in order to get back there, which it could if we have some good news or something, um, whether the market has discount all the bad news so far, maybe it has. I mean, the Fed news came out. The U.S.-Iran wars was very, lots of heightened tension there. I mean, we have zero TNX here. Let me see, 10-year U, sorry, hitting new high. Even this week, look at this. Even on Friday, we hit a new high, 4.74. But yet the market didn't correct, which is kind of interesting. As much as it didn't correct as much as we would think it would do. And so earlier in the week, it actually even went down. The market went down as the Treasury come down, which is kind of also weird. But this is kind of interesting that this is heading higher, but the market didn't haven't really react much to it, right? So. For the monthly S&P, you can see we have been climbing 2 months strong, April and May, and then June and July, we just went sideways. Look at how tight this is on the monthly chart. Obviously, the monthly chart are much tighter because, it's month to month, it doesn't change that big. But you can see, at least on the chart here, it looks like nothing, there's no pullback, nothing, right? It just looks more very natural, just sideways movement. Here's the Dow Jones Industrial chart. This one again been climbing since April, and even recently we did have a pullback for 3 weeks in a row, but it looks very orderly, right? It doesn't look very wide and loose type of pattern, and we just bounce off the red line this week and come back above it. So that is really good sign because and it closed. I mean, it's not at the top of the range, but it's at least in the upper half of the range. Here's the daily chart. You can see here again coming up, and then recently we're just slowly sliding down, sliding down. Again, nothing wide and loose action. Then we tried for a bounce recently, but it kind of fell on on Wednesday here after the Fed announcement, looks like. And then we were able to bounce back Thursday and Friday. Now we're back again above the short-term moving average there. So that is a good sign because we have multiple tests in this area, and it couldn't bring it down further, and then very quickly we bounce back again. So this is a very good sign actually. For the monthly chart, end of July here, we don't we again we see very nice movement going up. So the Dow Jones Industrial is doing really well, at least on a monthly basis here compared to Nasdaq and S&P. For Russell, we have slightly come down below the red line, which is the 10-week moving average, but it did close up slightly positive, like just barely. So, 1, 2, 3, 4, yeah, we're down 4 weeks previously, and like I said this week we didn't really climb back up. That is probably the concern there for the week here. On the daily chart, you can see the slowly drifting down, and then on Wednesday we slide below the red line, the 50-day moving average. On Thursday, we tried to come back, and then Friday we got rejected near that short-term moving average, and then it came back down, and then however, it did close in the middle range. But the problem here is again, we just below the red line, we below all the moving average, so this is still technically in a downtrend. If we do cross back above it, hold above that, and then the next day we fall through on that, that'll be the ideal situation there to get back in. As probably a lot of stocks that is in this category are probably basing, and that is a good sign if we do come back up. On the monthly chart, you can see we actually came back pretty strong April, May, and even June. And that's better than other index other than Dow Jones. And then on this month, July, we actually came down 3% overall. So, but on the chart, it doesn't look like anything is done. If you draw a channel line in the last 4 or 5 weeks here, on the bottom channel line is actually pretty steep slope. So that also shows that maybe Russell could, if this rally continues, obviously, then we could see Russell taking lead here because the slope is pretty strong. Let's put it that way. This is the CapForce IBD 50 ETF covering the top 50 growth stocks here. It is under distribution. You can see 1, 2, 3, 4, 5, 6 weeks down so far, and even this week we closed down. Even though it was little, but the problem is again we just closed at the bottom of the range. We are below the black line here, which is the 40-week moving average. So just lots of negative happening right now, and I think the leadership has been very not only like the AI memory chip stocks are all have been hit hard, but also I think even from other areas. Like there's no consistency in other areas as well, right? So most of them are just very choppy. So no clear leadership. So that's the negative part. Are we gonna find a bottom here? Hard to say because that will, if growth stocks start to bounce back, obviously, this index will come back up, and probably so does most of the Nasdaq or even, some other areas as well. On the daily chart, you can see we are under the green line here, which is the 10-day moving average for many, many days now. We haven't even come close to it. Even this week, if you look at this 4 days here, the last 4 days, it just couldn't even come and touch that green line. That's how, in my opinion, this looks really, really weak, right? Although the selling volume looks really low here, but maybe there's a change of heart. I don't know, but it just hasn't even come towards the 10-day. Kind of give me a negative signal here. So we'll have to see, and obviously things can change in a moment. But at this time right now, it just looks very weak. But yeah, and also leadership is not clear. We'll cover in the second video here, like in terms of the growth stocks, especially ones that have report earnings. We'll try to, figure out, okay, where is the leadership heading, right? Other than the AI memory chip stocks bouncing back, which, probably there's lots of investors and traders playing that area specifically. But, besides that, are the other areas starting to show some sort of leadership because we can't just have one area showing leadership for this market rally to be sustainable, right? Here's the US dollar index. It did fall back down this week very severely here, coming back all the way to the red line here, which is the 50-day moving average. So before this week, we were above the green line here, the 10-day moving average up here. And then we had a pretty big drop after the Wednesday Fed announcement. Yeah. So here we have the oil climbing last week, but this week, before Monday, the U.S. And Iran were saying that they weren't going to, hit each other. And then, as news broke out on Wednesday that Iran had a surprise attack on U.S. Base or something like that, that caused the oil price to jump back up. But so far it has been mild. It hasn't moved too much since Wednesday. So it's kind of, even though they're back at it, so it looks like at least the market didn't fear too much and jump back up again as much as one would think. So that's another interesting thing that's happening right now. Looking at gold, nothing movement here, continue to be in a downtrend. The same thing here with silver. Copper has some movement here, bouncing back about the 10-21 day here. So coming back to the new middle zone here of this recent consolidation. So that looks pretty good. Bitcoin also still come back to a downtrend as it couldn't climb back above the 10-21 day and also found resistance very clearly on this red line here, which is the 50-day moving average. So that is quite negative on Friday and make a new recent low here. So one other note is might be the mention about possible follow through day on the fourth day, right? Since the first bounce, so we have the 2 days of bounce. This is S&P chart, daily chart, and if we can hold, above the short-term moving average, right, and also like have a follow through day. So on the fourth day since the bottom, we since the first day of bounce here. If we have like nearly 1.25 to 1.5% gain in higher volume than the previous day, then we would have a follow through day. That would really signal a new change in trend. Now, not every time the follow through day will work, but a market rally has never been rally without a follow through day because we usually do see volume coming in to push the market higher. So that's what we're waiting for, is that signal where we want to see higher volume on a bounce day, right? Known as the follow through day. So we could see that. We'll have to see. Until that happens, I'm not going to think that's going to happen, right? It's a possibility that could happen, but we are still mostly in a downtrend for most of the market. But with that being said, anything can happen because earnings season is still happening, and there's still a lot of stocks that hasn't reported, probably, I don't know, 60-70% at least, that hasn't reported yet. and that could really change the outlook on the market, right? If earnings continue to be strong and forecast is strong, the market could rally again. So that's something we're still waiting for, and we are on the cusp of doing that right now. Obviously, this could turn down very fast as well. So, you know, but I feel like we had lots of bad news recently. So, especially we'll talk in a second. A lot of mega caps didn't even report well, but yet only a couple of them did well, Apple, Amazon and Microsoft, but yet the market is holding up much better than I imagined, given the situation so far. So for the coming week, the big news will be the jobs report coming out usually on Friday. We'll wait and see how that continues to show the economy whether it's still standing strong. And then we have again huge report from many earnings, many stocks here, including AMD, SanDisk, WDC, Caterpillar, SPCX, SpaceX here, Datadog, Cloudflare, Eli Lilly, Palantir, Arista Networks, TG Therapeutics, Dave, SEZL, Oscar Health, and Okeanis Eco Tankers. Just want to talk about this one article that came out from CNBC about Leopold, this guy here, hedge fund manager who lost a lot of money very short period of time, like in basically July, because of how leveraged it is on 400%. He's a very young guy, and he had make a lot of money. Like I think he went up, like according to this article, he went up over 1,000% on his portfolio. But recently because of the leverage, he got hit hard, like SK Hynix and CoreWeave here, stocks that he had owned, and so he had to liquidate many of them due to the uh, the leverage, right? Again, that is a huge leverage, 400%. So that brought him, lost like out of the 45 billion at the peak, he has only 10 billion left in assets right now, because of margin calls and stuff. So the question, bought is like about, well, in terms of like, are we have the market bottom for the AI stock? I mean, we'll look at it in a second, but I think like in general, like especially the last I think few days, has bounced back quite a bit for some of those AI stocks. So they're still below, most of them are still below their trend lines, like short-term moving average. So there's is it a possible? Yes, it's possible. Nothing is impossible, but we have to make sure we see that, those stocks clearing those area. Because the other thing I'll say is sometimes in bear market we do have the strongest bounce, and so yeah. So I'll just bring up SanDisk for a second, just because that is the one of the most prominent uh, AI memory chip stock here that has done really well in the last year. But you can see we bounced back from Wednesday low. So Thursday was very strong. Friday, I mean, in the morning, it gap up so much, but by the end of the close, we closed down. So there's lots of stocks that did this on Friday. Now, not all of them did that. Some of them just closed at the green line. Some even closed above the green line. Some even came close to the pink line 21 day, but they're all still below the 1021 day, one of those two lines. And even if they cross this pink line, I mean, the slope is so steep that it could fall apart after that. So again, it's just really too early to say this is over, right? Again, in a bear market, for some areas like the chips and AI related areas, this could be just a medium bounce that is short term and could continue into a long bear market. We just don't know, right? There's a lot of risk, and you can see even on the chart, it doesn't look like huge move, but it does. Like I mean, in 3 days, I think it moves like from low to bottom. Like look at this, low was like 998, and high was like 1380, 1400. That's almost like a 30 to 35% move right there in just two days. Like if you don't count the full days, that's pretty crazy. So that's the volatility that's happening right now. For me, I'm just staying out of it because I can't just. There's no way I can trade the 1 day movement. It's just too hard for me. So as I just mentioned, we're going to look at the SMH now from Nasdaq Semiconductor ETF here. We have a down week 3.6%. Although it closed in the middle range, it doesn't look as bad just because it didn't close at the bottom. It's still clearly in a downtrend. Whether this is a prolonged downtrend, no one really knows, right? So obviously you can buy it here and hope for a bounce. This is almost 20% off from the high for this index, but for this ETF here. But can it go down another 20%? It's possible. Like no one knows, right? Like it could come down to the black line here as well. That's near the last support level. So we'll have to see. Here's SMH here on the daily chart. You can see after like 1, 2, 3, 4, 5 severe down days. That was a huge hit. We come back for 2 days, which is a good recovery. It came back almost more than halfway. And then by Friday, we closed really weak. We closed back at the bottom of the range, which means we had found resistance at the green line and near the pink line here, which is not good, right? Because right now, it looks like we're just going to head back down. Um, Now, can that tune change? Yes, it can. We can have another bounce, and then we have another bounce, and we could easily have a follow-through day after those two bounces, right? Or we could even have a one strong day of bounce, but we still need to see that follow-through day on the general market. And all of a sudden, now the market could be set up for a new rally, and all these AI stocks could have come back. You just never know. It's possible. Or we can continue to take a big, dump here as institutions start to sell even more. We just don't look at the volume on the selling side, the 4 days, right? And look at the buying side, it's much lower, the 2 days here. Well, that's a sign that there's way more selling than buying so far. So like I say, if more selling comes in, we could be heading down very fast as well. So something to be mindful of. Here's Nvidia chart right here. Just very choppy. I mean, we still have about almost a month before the earnings report here, but it's been trading, like if you look at this, like from top to bottom here, where is it trading mostly? It's at the bottom half, right? So I wouldn't even touch this stock until it at least clear the middle point here. So you know, but obviously, even the short-term trend lines are all just become resistance level. Here's Taiwan Semiconductor. This one again look very similar to the SMH ETF. It tried to come back up and look at where it closed. This is just closing near the 10-day line again, right? Can it still follow through? Yes, we just talked about that earlier. But right now, it's just that reversal doesn't look very good. So I try to stay very open-minded at moments like this. I don't want to take too much action, especially with stocks in this area, just because it's unclear where it goes. Right now, the range is pretty high, pretty big. From low here to the high here, that is the range right now. It could be stuck in there for weeks. We don't know what's going to happen until we can see better visibility into how it act around those moving average. Then maybe I can take a chance there. But for now, these are all off limit for now. Here's AMD. It's going to be reporting next week here very shortly. Again, this one also reversed here and fall to the bottom on Friday. ARM holding the report, however, it didn't really have much reaction. Nothing out of ordinary. So you can look at that as neutral, but in terms of where it's at right now, it is way below the green line, so that is a negative. Broadcom here, again, finding resistance at the 50-day moving average, the red line here. Yeah. Here's Intel. Again, hasn't done well since the earnings. Tried to come back up this week. Pretty much follow similar to the ETF, the semi group here. Just reversing on Friday again. Not a good sign. So after having a brutal week last week for the software sector ETF here, IGV from iShares, it did bounce back pretty strong this week. So that is very welcome move. We are still stuck in this zone, right? This is range bound zone, right? Very tight action, except for last week. But the fact that we recover means we test the lows here, so that's good. So whether we can come out here, that'll be interesting to watch. I mean, we'll see in a second from Microsoft, but maybe that's the reason why it lift back the whole group. It's possible because Microsoft did do really well. We'll talk about in a second. But here's a 1, 2, 3, 4, 5, 6 days up now on IGV here. That is, very, very good improvement. Actually, more than I expected from last week's big drop, right? So we recovered very quickly, and now we are near the black line, the 200-day moving average. So we recover above all the short-term moving average. And now we may clear this 1920 previous resistance level here at the high here. So again, that could also be a leading group going forward. We went from chips and hardware to maybe software. Because software has done well for so long, and most stocks, have corrected in this area. And so most of the sellers, in terms of time and in terms of price, have really given up if they have waited this long. And the people who are left are the investors who are left are probably long-term holders. And so during a basing action that we've seen here for so long, that could mean that, hey, there's not many sellers left. And you can probably see it on the daily chart here on this ETF here. Look at all the red bars like in the last month. It's been all pretty low, right? And then recently you see all the buying volume coming back in above average. So again, that also shows signs of exhaustion. There's no more sellers, not as many as the buyers. And so if more buyers start to come in, it will push this higher even faster. So that's something to watch for. So here's Microsoft. We bought them quite a while ago, like more than almost a month ago, early, like right when July started, right here. And we slowly coming back up, although there's no big move, right? Just trending mostly slowly upward. And then recently we see that last week, few days correction here. And then from there we start to bounce slowly again, right? Just like the index. And then when the earnings came out and market really liked their cloud service growth, which includes AI revenue. I think it was 40% or something like that growth, which is very much higher than expected. And that's what pushed the stock up significantly, over 15% that day on Thursday. And then Friday, look at that. It followed through. Like this, again, still higher volume. So lots of institutions are probably coming in to buy some shares as this stock has been under correction for so long. And now we are near the previous high here at 466. So we getting close to breaking out this base here. But yeah, I mean, it obviously look extended right now, and most likely this will be one of my buy candidate. I haven't bought anything because I don't like chasing stocks, especially in too early in this earnings season, right? Anything can change in a dime here right now. So, but if there's some, if we can see it pull back to the near the green line, and it doesn't have to come all the way down, but just showing some resistance to go down, then and then any update would be my possible entry point there. But this could be a new leader in this whole AI space, as software may be starting to show that it works for some companies. Obviously, maybe not all companies, but Microsoft have been at it for 2 years now with their strategy to try to capitalize on AI, and maybe now it has started to work. So we'll see. Another stock that did really well on earnings, also on their cloud revenue, was Amazon here. And it moved up again, another strong move, 15%. Really showcase, like, that maybe this is the turn for some software guys, and with their cloud services offering in the AI, especially services. So this is also very interesting, right? Again, very long-term basing action here. And even this one looks pretty ugly recently, right here. I can't remember if this gap down was due to some news. I can't remember, but yeah, this gap up is really strong. So we have Microsoft and Amazon showing some sort of leadership right now, especially related to the software area. In terms of growth, right? Obviously, Amazon has their retail business, but talking about their software area services, their cloud services. Again, like obviously, as Google got hit hard with their earnings and their spending forecast, I mean, Amazon's, they all have high spending forecasts, right? Going towards the future, the biggest difference is, obviously, Microsoft and Amazon are showing that their growth is pretty high, and also they had shown better numbers, right? Whereas Google, look at this. I mean, it did really bad, but look at how fast it recovered on this gap down, and look at where we are now. We are above that area of gap down. So I would also consider this like, on hindsight, obviously it looks pretty bad, but right now, from a technical perspective, it shows that it has life now. So I wouldn't discount Google because Google is obviously one of the big area that will have AI offering as well, right? With the Gemini and all that. So again, could the software services in the AI area start to bounce back? So we'll see, right? Like this is a good, especially after this undercut here, and then bouncing back so fast, it really shows that hey, maybe that was the last exhaustion sell there. We'll see. Here's Meta. Meta also didn't do well on the earnings report there. Also undercut. It did bounce back on Friday, 3%. I mean, that's not a very strong bounce. We are way below the 10-21 days. So again, is this going to recover? Possibly, but it hasn't shown much strength though so far. Since it's only 1 day bounce, but still, it's just look very weak to me. So we do have Palantir reporting in 2 days. This stock has been so it just hasn't been talked about much anymore, and also like it's been very choppy action. You can see it just really lots of dump right here, and it's just choppy every day. I mean, it doesn't even look like institution quality type of stock. But we do have earnings coming out in 2 days, so anything can happen. So we'll have to see. This stock still have very strong earnings in the many quarters, and so whether they can change their outlook, and we'll see what they say. We do have Apple reporting as well, which didn't really bode well for them. As you can see, it gapped below the red line here, the 50-day moving average, so that looks very negative. It did close at the top of the intraday range, but still, it looks pretty bad. Pretty big drop, 7%. Obviously, it dropped more than that during the daytime. Um, yeah, I think they missed one of their numbers. I can't remember whether it's earnings or revenue, but yeah, it wasn't good. And obviously, that was Tim Cook's last conference meeting as well for their earnings report. So things are changing for sure. But there's lots of things coming up, right? Like for Apple as well, whether it's the new iPhone and so forth. But we'll have to see. But this was definitely a negative for the recent chart action here as well. Again, Tesla here hasn't done well since the earnings report. Again, very weak bounce Thursday and Friday, only 0.7% on Friday. It's way below the green line. This doesn't look good. I mean, this looks really terrible. Just the way it's, how it just comes down hard and goes sideways rather than trying to bounce back to the green line. It's an L-shaped pattern. That is a very bearish pattern. So just want to mention that. Here's Netflix. Didn't do well during the earnings, and slowly he's been bouncing back towards the 10-21 day. And right now it's trading very tight. Right now it is down 2% on Friday. But with that all being said, I mean, it does look like it's stabilizing more than before. But we'll have to see if it does bounce back. We still have the red line to test, right? Because it hasn't come back to the red line yet once. So if it does come back to the red line, the 50-day moving average, it will probably get tested there as well. And then if it can surpass that, then maybe a new beginning could be happening for a new rally here. So we'll see. Thank you all for watching. And there's lots of earnings. This is major earnings for this big mega caps. The market has survived it so far, mostly. And so that is a good thing. Um, um, we'll have to see. Yeah, more earnings from other growth stock will come up, and we'll discuss that in the next video. Thank you for listening. Hope you guys all have a good weekend, and please like and subscribe.